Let's talk about the real estate market because there's been a lot of speculation that it is finally coming down, which means that if you're a buyer, this maybe is the beginning of a good time to buy a home. And spoiler alert, unfortunately, I just don't think that's going to be the case. So today, we're going to break down some of the numbers and what is likely to happen in the next year or two. Again, spoiler alert, unfortunately, it's probably not going to be as good as one might hope. As always, my name is Derek. I got my degree in finance, so you don't have to. I also was a real estate agent. I was a licensed real estate agent and realtor. So I understand the market, both from a financial perspective as well as from a sales and buying perspective. So right now, the big news is in September, the Federal Reserve cut their FFR. This is the federal funds rate, and it basically influences short-term borrowing costs. Although, let's just be honest, it does have influence over treasury rates, as well as maybe not direct, but indirect influence over interest rates for mortgages. So a lot of the speculation is, hey, the FFR is finally going to continue its journey downward, which means loans, mortgages might be more affordable. Now, yes, this is true, and in reality, the FFR influences the 10-year Treasury. There's about a 2%, give or take, differential between those two, and then there's another 1.5 to 3%, depending on market conditions, differential between the 10-year yield and mortgages. Here's the thing: when the FFR is lowered, you also have positive influence on construction loans, on companies being able to expand, right? Because that's the whole purpose of the FFR. You either restrict capital, which helps inflation, but it slows down the economy, or you unrestrict capital or de-restrict capital, and then you have companies being able to grow quicker. This includes construction companies. So on one side of the coin, you have mortgage rates, which will be positively affected for buyers. You also theoretically have construction companies. They will have easier access to capital, which in theory, again, should allow for more supply. Okay, now let's get into why I don't think it's going to be as good as one might hope. Right now, the real estate market is undersupplied by probably close to 4 million homes. That's like the general consensus estimate. Some estimates are higher, some estimates are lower, but a good average is 2.5 to 4 million homes. And in my opinion, it's probably closer to that 3 to 4 million range, which means that just to equalize the market, okay? This doesn't mean switch the market into a buyer's market. Just to equalize the market, we need a ton more homes, about 4 million, okay? Now, the reason why home prices have been able to remain high, even though there is very clearly more supply now than there was last year, and you see this. You see homes sitting for a little bit longer, right? You also see the supply of homes in the area, and of course, every market is slightly different across the country, but overall, there is more supply now than there was before. And this is why people start to say, hey, maybe it's turning into a buyer's market. The problem is that you need so much, an insurmountable amount more of supply than demand to equalize the market, that to shift the market into a buyer's market, it is an enormous number, 4+ million. Now, the reason why, even though there is more supply, you're not necessarily seeing a decline in prices is simply because of mortgage rates. Okay, these sellers, a lot of them have 2.5 to 3.5% mortgages. So when they list their house with the hopes of being able to sell, yeah, some of them have to sell because they have to move for jobs, etc. But a lot of them don't have to sell, and they just want to sell to upgrade their house or change locations slightly. They're not going to accept a lowball offer because they understand that if they end up selling, they're going to have to take a higher mortgage. So they're not going to sell for a price that they don't want, which is why even though these houses are taking longer to move, you're not seeing a drastic reduction in price because these sellers don't have to sell. And even the ones that kind of sort of have to sell, they're at odds because of mortgages. They know that if they sell, if they cut $50,000 or $100,000 off their asking price, That's money that could have been used as a down payment to their next house, which they're going to have a much higher mortgage in order to do so. Not only that, the other option is renting. Now, I'm not saying to rent a home, but as an owner of a home, if you can swing two mortgages, you can get yourself the new house that you want at the higher mortgage with the hopes of refinancing. And instead of selling your home for way less than you wanted to sell, you can just rent it, which is why you are seeing some movement in the rental prices. You are seeing some movement in some areas of rental prices either stabilizing or coming down. And that is because, once again, these people who have very low mortgages, 2.8%, 3%, 3.5%, they can list their home for rent at a significantly lower price than other people who are buying homes right now to rent them out, which is putting pressure on the rental market because they don't have such a large mortgage to cover. So you are seeing basically people instead. I literally just saw this the other day. A friend who wanted to purchase a home, that home went from for sale. It didn't move, it didn't sell, but instead of getting a $50,000 haircut, it was just put for rent. So I think you're going to see this more and more. Now, the other major thing that we have to remember is that even if mortgage rates do come down, even if they come down 5%, 4%, or even lower, if tomorrow magically mortgages were back at their lows of like 2.5%, the amount of new buyers that are going to flood the market in that scenario, they're only going to cause home prices to skyrocket because there is not enough supply. So until we have 1, 2, 3, 4 million homes built, new homes built, until we have that, it doesn't matter if mortgage rates come down because that is just going to flood the market with buyers who are waiting. Buyers who don't or can't afford a 5, 6, 7% mortgage. As those mortgages come down, more and more buyers flood the market. So in 2025, and look, you can go look at my videos from 2 years ago, from a year ago when I started this whole YouTube journey. I had said that we are not going to see relief until 2025, 2026. This was like early 2024 when this was being said by me. That's just what's going to happen. And now that we are in 2025, more than halfway through 2025, you are not going to see lower home prices in 2025, 2026, and you might not start to see a reasonable opportunity to purchase a home until way past that. So that is why right now, and I've said this before, in a lot of instances, renting is better. If you're looking at just from a financial standpoint, renting is better. Unless you can put a massive down payment where you have a very small mortgage, renting is better. And even in those situations where you can put a massive down payment, renting is still better because just because you own the house outright doesn't mean you don't have expenses, right? You have expenses like maintenance. You have expenses like HOA, like taxes, like utilities. Sometimes utilities are included in rent. So for a lot of people right now, you are just going to be able to rent a home for less money. Now, does that mean that you can't change, you can't change the countertops, you can't change the flooring? Yes, but a lot of people can't afford to do that when they buy a house anyway. Does it mean you can't change the colors? You can't nail things into the wall? Does it mean that at any moment the owner could come and say, I actually want to use this house, right? Or I want to move back into this house. Yeah, that's true. You don't own the property. That is true. But if you're looking at it just from a financial standpoint, right now, still, renting is better. And I don't know when that is going to change again. Owning a home right now is insanely expensive. And yes, you're right. You're building up some equity by owning a home. But when you look at the mortgage payout payments, you are not going to start making a meaningful contribution to your mortgage until like year 10 and beyond. So if you plan on moving in 5 years, you basically just paid interest on every mortgage payment for 5, 6, 7, 8, 9, 10 years. You just paid interest. So you didn't really build up any equity. Now, if a house appreciates $100,000, yeah, you did. But now houses are starting to slow in their appreciation, right? Like 1% in some areas per year. So house appreciation is starting to slow. So plus if you're moving in 5 years, you're not getting it. You're not building equity. Okay, you're not building equity. So you might as well have just rented for $1,000 to $2,000 less per month if you're going to move in 5, 6, 7 years. So unfortunately, the real estate market right now is still fucked. Genuinely, it's still fucked, and it's probably going to be fucked for this year and next year. And until we get more supply, it's just going to be insanely expensive. And that almost seems like it's by design, right? To keep asset prices higher because, again, the generations before us, and I'm not bitching, I'm just saying the truth, the generations before us, they set certain laws in place to protect their equity in real estate through zoning and other measures, as well as their equity in the stock market to cause things and values of assets to continually go up, when in reality, a house, if you really think about it, should just be something that everybody has, but instead it is a massive asset. And to be honest, I don't even want to unravel that because then nobody can retire either. It's a very tricky, unfortunate situation that the economy is currently in. Without risking dragging this out too long, hopefully this video was informative. If it was, please consider subscribing. It's difficult to grow here on YouTube. Coming from someone who ran a successful business, the transition to content creation has been humbling because it is very difficult to grow here on YouTube. So if this was informative, every subscription means the world to me, so please consider doing so. I will see you in the next video, usually weekly, but sometimes way more than weekly. Until then, I hope you have a fantastic rest of your day. Take care.